Good morning, good morning, good morning. So, just a little while ago, whole live session was muted, couldn't hear a thing, but that's okay. So, I'll come back to record to go over the analysis and talk about the exit strategy. And so, this morning on our call at 7:30, we said that price did this bullish flag pattern. I'm sorry, bearish flag pattern. This is a bearish flag pattern. Let me hide that. And so what happened? Had a bearish flag pattern, and we said price could possibly push down, but we knew we had the NFP and then report, and then we had unemployment reports. Okay. And so what happened? When the confidence in the US dollar is low, that is when you will see gold buy up. Economic uncertainty is always going to be one of the reasons why the gold market buys up. And this is MGC futures. This is gold futures that we're looking at. And so the price of gold futures is going to be a little higher than the price of the actual gold currency. And so we're looking at gold futures. We're looking at right now possibly a pullback. We did say that price, we saw this flag pattern that it created, that formed this morning. And so price pushed up, kind of tapered off, and then broke out again. And so before we go into a buy, we said we wanted to have a pullback. So price could possibly pull back to this area here. And if it pulls back to this area, we're looking for price to buy back up. So we want to wait before we buy for a pullback. We don't want it buy high. We want to wait for a retracement and then enter at the end of that retracement, the beginning of another impulsive move. And so we want to wait for price to pull back, it could possibly come back to this previous ceiling of 36.40 and then go up, but it possibly, you might get it to just come down to this area where this auto trail middle line, this EMA. And so come back to that area. That is where you're looking to enter in for a buy. We're looking for a pullback for a buy. Price is moving up. And so we have to be cautious of what the market is getting ready to do. And when gold is buying, that is because like it is, and this is another all-time high on the gold currency as well as gold futures. And so what that means is there is a lot of economic uncertainty, and this is September, and we have indexes dropping while we have gold buying. And so gold going high like this is a concern. It should be a concern for those who are watching the economy. But nonetheless, we're preparing, because when you trade the market, you are, and you know price action, you're not concerned about that. But what I love is that the exit strategy over the last 7 days called positions, and it was $2,800 that it called out on those positions. And so the focus is, and this was in the time frame that I have set. So from that 7:30 to 12 noon time frame, that is where those positions were called, and that was where the profitability was taken at, was between the 7:30. I have the alerts set on the exit strategy where it only calls buys or sells during my trading time frame. So from 7:30 to 12 noon is where I'm looking for the market to move and for those alerts to be called. And so it called this buy this morning. And so it called a buy this morning. And so we are looking for price to possibly pull back and go back up, but it called it. And so it's not going to call another buy because it's going to only call them at the crossover. So it will call another position if this sells down. If price begins to cross over and it sells down, then that's when you're going to get an alert that price is selling. But that's only going to happen at a crossover. It's not going to happen at a pullback. And so if you miss this move this morning, because it called it back here and it called it here, it hit TP, it kind of retraced, hit TP, stop loss here, but it actually came back. If you would have re-entered after it hit, it came back and it was up. But that was at the news. That was at the news. And so this candle here is news. It's all news. If you had your stop losses in, this is why you have your stop losses. You have your stop loss in. You could have re-entered if it had gone in the opposite direction, but this is why we have stop losses, is to protect our capital. And so the market bought up. It did call a buy here, and then it called another buy here, and the market shot up. It shot up. And so now we're waiting for a pullback for a re-entry zone, a pullback for a re-entry. And so we had this flag pattern that formed, but guess what? Price did not respect that. The news didn't care about that. And so it decided to shoot up. And so what we're waiting for now is a pullback for re-entry, a pullback for re-entry. We're looking for price to possibly pull back here. And that could have possibly been that pullback that we saw. And then price is going to go up. But let's see if it continues to pull down just a little bit more to this 36.44 or this 36.47 before we re-enter, because we are now in discovery zone. Price is in discovery zone. So let's wait and see what price does before we call it, And so I am not going to take any positions until I get a pullback. So I have this alert set. If it pulls back to this area, great. I'm not taking a position until there is a pullback. If there is no pullback, there is no position to take. And so that is the strategy for today. That is the assessment for this morning. My whole call this morning, my 17-minute call that I was on, was muted. It was completely muted. And so you couldn't hear a word I was saying. If you were on, you couldn't hear a word I was saying, but that's okay. Came back, wanted to give the analysis, wanted to say what was being done on this particular day, this time frame. What we're focusing on, MGC, we're doing the funded challenge with Apex Trader Funding, and they sponsored some free accounts for us to do the challenge. And so we're doing the challenge. Apex is the best. And so we're doing the Apex Trader Funding Challenge, and the focus is to do it within 28 days. Why? You can pass the funded account in a day. Why do you want to do it in 28 days? Because you need to focus on discipline and consistency. That's why we want to be profitable traders. That means you need to focus on proper risk management. You need to focus on doing it the correct way. And most people think it's a gamble, and that's not what this is. And so we're teaching people to focus on the wins and the losses, because there will be wins and there will be losses. But guess what? You live to trade another day with risk management, proper risk management. And that's the focus. And so we could do it in one day, but usually if you're passing in one day, what's happening? You're over leveraging your account to get that win. And guess what? We don't focus on the wins. We focus on what we can lose. That is the focus, is what's the loss? What's the possible risk? Not so much as what the gain is. Not so much as the risk. Not so much as the gain, the reward, but we're focusing on what the risk is. We want to minimize risk and maximize reward. And so 28 days, we are, what is this? 3 days in? So it was on the 2nd. We started on the 2nd. And so this is the last day for the first week. And then we're going to come back on next week, and we're going to get back in the challenge. And so we will see you guys next week. Happy trading. Excited for everybody. Make sure that I will plug that in the caption, so you plug into the Discord for trading motivation, and just to be a part of a community that is focusing on wealth building. Okay. So talk to you soon. Bye. Happy trading. Happy weekend. Be blessed.